All right. Did Nvidia save the bull market? Are the Mag 7 cracking up and just floundering out there? Is SpaceX going to be the IPO that you wished you bought more of? All that and more coming to you live tonight on The Big Skinny with me, this guy, Lou Basenese, who's fired up and fed up with all the nonsense that's been flying around these markets about the Mag 7. Too many people are crowding into the semiconductor trade. Oh my, what are we going to do? Folks, do you run away from a Taylor Swift concert because there's too many people piling in? No, when there's a good thing, and I'm not saying Taylor Swift's a good thing, but when there's a good thing and a great thing that's been making you money for a decade, it is not the time to opine on bailing on that. But folks, that's exactly what we're hearing in the headlines. If you're joining us for the first time, you're in for a treat, because what we do here at the Big Skinny is all filling, zero fluff. We cut through the BS on Wall Street and tell you the data that you need to understand to make more money and increase your bottom line. And forgive me, I may be sounding and seeming a little bit arrogant, confident, but I promise you this. Here at the Big Skinny, we believe in one big thing: be humble or be humbled by the market. So we always bring on guests and bring in insights from other people. We're not bringing on a guest tonight, so screw that. I messed up on that one. But we are bringing insights from other people throughout tonight's conversation to really bring it to a forefront of what matters in the market so that you can increase your bottom line. Because let's be honest, if we don't make money together, we can have plenty of fun together, but we're not going to hang out for much longer, because in these markets, we all suffer from the same malaise of being overwhelmed with too much information and not enough spot-on insights to tell you what to buy, when to buy it, and when to sell it. And that's what we're here to do. So please join the conversation. This is one of those shows that you can choose your own adventure. We are streaming live. Yes, that means completely live. Every other episode or so, someone punches into the chat, "Are we really live right now?" And it shows up on the screen as if they think we're not live, but we are live. We would love all your questions, biting criticisms. Tell me to be quiet, shut up, send me back to Jersey, or give me kudos for some picks that we've made. We're going to go through that. And more than anything, this episode is going to be packed with more actionable insights than we've had probably in a couple months. I'm giving you at least 10 different individual stocks that are no-brainer buys in my mind in this market. But first, we're going to start off with what we do every week. It's our rundown. It's the one thing that I think is the most important in the world right now, as of today, May 21st, that you should be paying attention to. And we do it in our similar style, that are always the same style. 111. One headline that you should absolutely ignore because the consensus often gets it completely wrong. One chart you better pay attention to because the data seldom lies. And one investment insight you should take and follow to increase your bottom line alongside ours. So please, let's get to this week's first rundown. Sentiment sucks as a leading indicator. People love to tell you that we want to know what consumers are doing. We want to know what the fund managers are doing. Do the opposite. That's what Warren Buffett said too. When everyone's greedy, be fearful. When everyone's fearful, be greedy. So what does that mean? Well, we've got headlines coming at us from all angles. Barron's leading the way here about the latest global fund manager survey. Oh me, oh my, henny penny, the sky is falling. The crowded trade is semiconductors. It's the hedge fund hotel. Everyone's in semis. You should get out. This is just lazy analysis. I give zero craps about what hedge fund managers and institutional managers are feeling. Because here's what I know. Human nature, and they're humans just like us. They may be labeled the smart money, but they can be dumb money too. But they're humans just like us at the end of the day. And they feel one way and they do the opposite. Greatest example here, consumers. Consumer sentiment is in the basement. Consumer spending, not so much, right? So even though consumers feel bad, they continue to spend. So what does it mean? Should we care that the semiconductor trade is really crowded? Absolutely not. I mean, survey says that should be crowded because it's the best performing trade this year, last year, the last 3 years, the last 5 years, the last 10 years. It's the hottest trend in the world, and it makes imminent sense. Think about it. Look around your room. I mean, I'm looking at a laptop right now. I'm looking at 2, 3, 4 cameras, an iMac over there, these microphones in front of me, the lighting, everything I look at has chips in it. Chips are the oxygen of the digital economy. It makes imminent sense that all of these semiconductor plays should be rallying to the upside because if you look at it, semis are here to stay and here to stay for a long time, not a short time. Folks, I will tell you this, let's put it in context because sometimes it's just hard to quantify. I mean, even your car, if those of you that don't live in a city like me actually have a car, when you get in that thing, it's not like your father's old muscle car from the 60s or 70s. That thing is loaded up and loaded to bear with chips everywhere. 30% of automobile components are now chips. So how big is this chip industry? This is not a flash in the pan just because of AI. It's huge. It's huge, as the president would say. The value of the semiconductor industry is going to be totaled at 775 billion. That's back in 2024, going all the way to 1.5 to 1.8 trillion by 2030. This is coming from McKinsey Global that looked at it a little bit differently because a lot of things get lost in the back and forth between chip companies that are fabless and make their own chips and design chips and don't make them. The estimates you've previously seen was this number was closer to like 400 to 500 billion back in 2024, going to 1.5 to 1.6 trillion dollars. Think about this. This is an industry that has never experienced a double-digit decline or even a quarter over quarter decline consistently in more than 2 quarters outside the great financial crisis and COVID. Up and to the right is how the semiconductor industry acts. So then why does everyone freak out? Everyone tries to tell you it's cyclical. Well, I'm going to tell you something. The analysts are wrong. Sell side analysts there's no incentive for them to stick their necks out, but they tend to stick their nets out to the contrarian side. So BTIG's analyst is out there saying now, again, pounding the table because he just listens to all these fund managers that they've written ad nauseum about this. My, oh my, why haven't we listened to them the first time? That in many cases, we've not seen the semiconductors rallying this much since the dot-com bubble. In some ways, however, this move is actually more extreme. I'm sorry, folks. It's justified. It's more extreme. The rally in semiconductors is more extreme because the business is more extreme. The demand is more extreme. We've never had a digital explosion in terms of content generated, data consumed, created, multiplied, accelerated, you name it, any way you face it, it's happening. And we're not just talking about dumb chips. We're talking about smart chips. We're talking about everything in between. You can't get through everyday life without chips. So what does that mean? What's the money chart? Let me bring it to you. Would you bet against this? I mean, if you're a gambling person and you go to Vegas, you're going to bet against this trend, this hot hand? Let the chips never fall. This shows the performance of the semiconductor ETF, the most prevalent one that we've been advocating for years, but we haven't launched the big skinny in years ago. So since the 7 or 8 months ago, that you should at least have exposure to the SOXX ETF. It's up a whopping 1,604% over the last decade. That compares pretty favorably to the S&P 500, up only 261%, only in quotes, and the NASDAQ up a measly 439%. So, folks, this is the hottest trend of the last decade. I'm here to tell you it's going to be the hottest trend of the next decade because AI isn't going anywhere anytime soon. So what does this mean from an investment standpoint, right? What's the big skinny? What's the big takeaway? Keep buying the iShares Philadelphia Semiconductor Index ETF, right? SOXX. This is the best way to play the trend. Now, yes, there's going to be individual semiconductor names that are part of this ETF that rally way more. But folks, we're looking for at least a foothold into the semiconductor industry. And I've told you this from the beginning. If you're new to investing, even if you're seasoned in investing, the best way to play hot trends is own an ETF that gives you pure play exposure and then add and complement that with individual stock names. And we're going to give you some of those later tonight in the show. But first and foremost, you got to own the main trend, the main sector, and this is the best performer. I'll bet you dollars to donuts a decade from now, we're going to come back and say the semiconductor industry and the sector was the best performer of the last decade and the next decade. Anyone care to disagree? Chad Towers, the man, always here, and let's see what he said. Chad, we're talking about semis. We can talk about oil and gas later on in the show, brother. I'll cover this question. Let's bring this back up later on. This man's always got prop on his mind. I do too, because it's my daily employer. But we'll cover that. Right now, we're focusing on semiconductors. Make sure you own some in your portfolio, or you're going to be crying on the side of the road with those fund managers that are saying, it's too crowded. I can't put more into this. We'll talk about those fund managers, by the way, at the end of the show in our headlines and head scratchers segment, showing how their feelings are often misguided, misplaced, and lead to underperformance. So they're a great contrarian, but not leading indicator. We'll get right back to that later on in the show. But right now, we want to make sure you never miss an episode or an email from us. Make sure you're following us on socials. We're live streaming right now on X. I'm going to call it Twitter. I say this, I'm going to call it Twitter until Elon Musk follows me. After I, trash talk his SpaceX IPO, I can guarantee there's about a 0.0% chance Elon ever follows me, just like Mark Zuckerberg will never follow me on Instagram or Facebook because I've trashed him for decades in the media too. But hey, follow us on YouTube then. I got no complaints. I got nothing but love for Alphabet, the owner of YouTube. I want to be a little bit, like a fraction as good as Mr. Beast. We're trying to get a tiny bit as much subscribers as him. But more importantly, you subscribe to our YouTube channel, follow the QR code on our screen. You'll never miss an episode of The Big Skinny. And I'm telling you what, we're coming to you live on Thursdays, but we're putting out episodes, really insightful, actionable episodes with market pros more than 2 to 3 times a week. So I don't want you to miss any of those episodes. We've got another one launching tomorrow with Tally Leger, Chief Market Strategist at Wealth Consulting Group. We had one from Kenny Polcari and my buddy Mike Lee. The hits are going to keep on coming, folks, and we want to make sure that you don't miss a single one. So speaking of which, don't miss us on the other side of this break. We're going to take a quick one, but we'll be right back with more insights, more actions to take, and more all-filling, zero fluff with The Big Skinny with Lou Basenese. We'll be right back.
That is 38. That will pay 1 week of interest on the national debt. It pays 1/4 of a month.
Slow and steady. I got to give credit. A friend of the show, Tom Hayes at Great Hill Capital Management. Turnaround Tom called this. He was early. I doubted him. I've now learned to not bet against 2 people, Elon Musk or Tom Hayes.
So let me just walk us through the results.
Yeah.
He likes Papa John's.
Significantly surpassed analyst expectations. This rally was a blockbuster earnings beat and a robust outlook for the quarter, signaling a faster than expected turnaround. Basically, Intel's CPUs are back. They talked about revenue up 22% year over year to $5 billion, driven by high demand for some of their Xeon 6 processors and Gaudi 3 accelerators. All of that sounds like gibberish to me, but all you need to know.
Gaudi 3 accelerators? Wow. The flux capacitor is back, baby.
We should sell.
Nvidia just reported another record quarter, but why did the stock sell off? Is it time to bail on the Mag 7? We're answering that question right now in this block, and I got news for you. Absolutely not. Not a no, but a hell no. Don't you dare sell your Mag 7 stocks, but choose wisely. We're going to get into that right now. Semis are too overcrowded is just the tagline of the day for the mainstream media, and we want to break it down and figure out why they're absolutely wrong. So let's start with one headline that they've gotten wrong too. Fortune coming out of the gates at the beginning of the year, trying to tell us that the Mag 7's dominance is wavering. What are these crackheads thinking? The Mag 7's dominance has not shown any signs of cracking. Now, I'll be the first to admit I'm the one that's been on the airwaves for far too long saying that the Mag 7's like a boy band that broke up and you just can't buy all 7 of them. But that doesn't mean by any stretch of the imagination that they've all faltered and are falling apart. That's not the case. I always say the Mag 7's fallen apart from the standpoint of who the heck wants to buy Tesla? It's an overvalued, overpriced car company, not a robotics company like everyone wants to believe. And what about Netflix? It's spending just oodles and oodles, billions and billions, I think north of $16-17 billion a year now on content. That's a race to the bottom in terms of just margins. So that Mag 7 is, yes, it's broken up, but does it mean it's all done and cooked, that they're not growing earnings? No, let me tell you what, not only are they growing earnings, they're continuing growing revenues. Look at this table list of the top revenue producing companies basically in the markets from Charlie, Bilello. I probably pronounced that wrong. I'm sorry, Charlie. I butchered it, but we'll get you on the show one time so you can get it right for me. But look at this. Go down the list. Some of the top 12 trailing 12-month net income. This is profitability. Google, 160 billion. Nvidia, Apple, Microsoft, Amazon. Noticing a trend, all Mag 7. Meta. Look at the Russell 2000. That's combined. That's 2,000 small cap companies. The reported profits for the last 12 months, $16 billion. 16 billion. That's it compared to Alphabet, Google at 160 billion. So show me where the cracks are here. I don't see it. And I'm telling you that the propulsion for these companies to report such large bottom lines is the AI trend. It's semiconductors. It's nothing but that. Everything that these companies do, if you boil it down, hinges upon chips. So why would we get rid of chips? I mean, if we look at the actual data for earnings here, a great stat, if you're not following FactSet Insights, they do a blog. It's John Butters is the analyst there. Go subscribe to it. It's every week or so. You get some really good insights in terms of what's going on in the earnings. And why do I care so much about earnings? As we said here all along, earnings ultimately drive stock prices. So if you're new to investing, all you need to know is if earnings are going up quarter over quarter, that stock's going to go up quarter over quarter. If earnings are going down, that stock's going to be under pressure. So what do we make of the Mag 7? What's going on with their earnings? Well, guess what? 4 of the 5 top contributors to the year-over-year earnings growth rate of the entire market, the S&P 500, are Mag 7 companies: Alphabet, Nvidia, Amazon, and Meta Platforms. I mean, Meta just torching it. Interestingly enough, one of the big contributors here is Eli Lilly. We'll talk about that probably later in the show. But you got to see this. There's no signs of cracking here. If 4 out of the 7 are the leading contributors to S&P 500 growth, that means they're the leaders. They're driving this whole market forward. And if you look at it, in fact, the tech sector accounts for 41% of earnings growth of the S&P 500. That's a huge contribution, and that is not reason to get out of it. So let's come back to Nvidia. Nvidia reported earnings this week. I want to tell you, and I want to bring in Dodd in here to challenge me on this. He's always around to just ask the questions that I don't think to ask because I've been around the markets for too long. But I want to pull up the money chart for Nvidia here and see what he thinks. I mean, let's shoot holes in this. Nvidia's dirty dozen, 12 quarters in a row of record-setting revenue. Folks, if the AI trend is a bubble, this is not happening. I mean, if I go down the list, there's stat after stat after stat that shows that business is booming. It's not hype, it's actual results. Revenue is not the only indicator. Nvidia now announcing an $80 billion stock buyback program and raising their dividend from 1 penny to a quarter. Companies don't do that if they're worried about, is this trend going to stop? Are we going to run out of cash flow and profits to be able to pay that dividend? Because once you start a dividend, you can't get rid of a dividend. You can't even reduce a dividend. It gets viewed so miserably by investors. So Nvidia coming out saying, we got another $1 trillion in demand, no problem. I challenge you, find someone that can shoot holes in the AI trend. I just need a data point that's real. It's not just Nvidia that's showing this. We're seeing it across the board. Microsoft, Alphabet, Meta. We're going to get into companies later on in the C block here that are providing services that come off of these chip companies. We're going to talk about service providers that are facilitating the growth of products and solutions in the AI boom. So look, Nvidia's dirty dozen is the only data point you need to focus on when you want to know whether this AI trend is continuing. Here's the key. They just reported, $81.6 billion in revenue this quarter. That's without China. The whole trade wars are still impacting them. It'd be another $5 billion if you added China there. And they expect next quarter to report $91 billion. So the 13th consecutive record quarter of revenue is on the way. That's dropping to the bottom line. What's the big skinny here? What's the takeaway? I was late to this game. I'll concede it. I didn't buy Nvidia anywhere close to the bottom, the middle. It was near a top, but it keeps going higher. Keep buying Nvidia. You have to own it. It is like the Michael Jordan of the NBA. You have to be involved in the MVP of the AI race. This is it's just a fact, a matter of fact. But you also have to have other names, right? So we're going to have the SOXX exposure through the ETF We're going to nibble on some Nvidia here. Don't worry, it's not expensive, trading at 20 times forward earnings. It's cheaper than Walmart, if you can believe that. Walmart's at about a 40 times multiple. So who would have thunk in a market like this, rip-roaring growth record highs, that Walmart, a retailer, a low-cost retailer, would be trading at a higher valuation than arguably, well, it is the biggest company in existence, but arguably the fastest growing company in existence. I'm sorry, folks. That situation will not last indefinitely. Walmart will correct to the downside and Nvidia will correct to the upside. We want to make sure that you're participating in it as well. So please, if you think I'm crazy, you think I've lost my marbles because I'm banging the table at Nvidia after it keeps reporting record growth, I got news for you. We've interviewed a lot of smart people, way smarter than me, in the course of the Big Skinny launching just over a year ago. And I'm going to bring you some quotes from them. And I'm going to tell you, I'm going to encourage you. If you doubt me, go listen to their comments and don't doubt them. Beth Kindig, probably one of our most watched interviews ever, said that they're revisiting their $10 trillion market cap original prediction. She now thinks Nvidia, which is trading at about $5.5 trillion market cap, could go to $20 trillion in the next 5 years. So you're talking about roughly a 3.5 to 4x increase in your money in the biggest company in the world. So check out, she backs it up. In the interview, she went through the whole fundamentals and the metrics and the variables and everything that Nvidia has to hit to make that a reality, to go from 10 trillion to 20 trillion with our price target. But she's not alone. We also just interviewed recently Mike Lee, a Mike Lee strategy, who's a man that I don't want to meet in a dark alley because he knows jujitsu and high rocks and played rugby, and like he's one tough dude, but he's also really great at spotting technology companies early. He was in Palantir in the single digits, and he pointed out aptly that Nvidia just has these periods where it does nothing and then explodes. I'd argue, folks, we're on the cusp of that next explosion based upon these quarterly results. But then none other than Kenny Polcari, the happiest Italian that I've ever met, walk the floor of the New York Stock Exchange. We played a game of fund, marry, kill. That's right, fund, not the other F word, marry and kill. And he'd fund Nvidia because it's unbelievably cheap. So even if you're not a huge believer in the AI trend, you got to buy things low and sell them high. And Nvidia just presents that opportunity in the current market. Last but not least, one of the most, I would just say, the most savvy tactical allocator in this market, Eddie Gabor. We've been across each other for over a year and a half on Fox Business, met in person for the first time, and just continue to be impressed with his just understanding of what's coming next in the markets, how to position clients for it. And he says it definitively here. Nvidia, bar none, most important semi name in the space and probably the most important stock in the entire world. I would agree with that. Yes, we could say that Nvidia doesn't matter as much anymore because the AI trend is broadening out, but it is the undeniable king of the AI trend, and this kingdom is getting bigger. So check out the interviews. We got them up here, the QR code. If you're listening, streaming this and just listening to the audio, go to our YouTube channel. Check us out there. Find us on X. We always archive, provide clips of all these insights because it's not just us opining. It's very well researched, thoughtful market pros that have been doing this for decades that are bringing you great ideas. And in this case, backing us up on our Nvidia call to back up the truck while it's still cheap before, as Mike Lee said, it goes through this period of just being a sleeper and then rips to the next level. It's almost like a SpaceX rocket ship taking off, which Elon Musk is getting ready to do more of. I had another launch today, but follow us on X. Never miss another episode, another insight. We've been putting out a lot more on X, trying to be more active on socials. We'd love for you to be more active in the comment sections. Angel Quinones, I know you're out there, my friend. Don't be afraid to make a comment, but keep it PG. You know how we roll here, my friend. But anyway, join the conversation all along the way. We're live streaming on X and YouTube, and we're going to be right back after a short break. We're going to tackle 10 top stocks in the AI race that are not Nvidia that you should own as well. We'll be right back.
Given the fact that we've run up a ton, in the A block we talked about Seagate, and even though it took a big hit today, for example, you look at its year-to-date chart and it's astounding. Many of these stocks are performing that way despite what's happening.
Yeah, countless companies that I wish I had bought more of that are up 400-500% that we've missed. But I think what's important here is to understand the president's just sequencing here. He's not surrendering in any way, shape, or form. He's saying, look, there seems to be, based on our allies, a path to peace. Let's give them a day or two, but we're going to keep it out here. It's like saying we're going to have diplomacy, but there's a loaded gun sitting on the table. You're negotiating knowing that aggressive force is going to be coming next if you don't get to some agreement. But I would say this, Iran's one currency that they always use is time. Delay, 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 and hope that something breaks in their favor in that way. I don't think the president's going to give them that opportunity.
Delay works for them, but Taylor, you've shown.
If you miss buying Nvidia, don't worry. There's at least 10 other stocks that you can still get in on the ground floor to make and mint a fortune in this AI trend. And we're going to go through those and more right now as we provide an update on our list, one of the most successful launches and just groups of stocks we've ever named. It's the top 10 AI stocks not named Nvidia. To bring us through this exercise, I want to bring in the man, the myth, the legend, always sunny in Florida, not Philly, the Dodd man. Welcome back, buddy.
My man.
Wow, what a buildup, man. I don't know if I can live up to that, except for my red face again. I don't understand. That red. It's my lighting.
Do you have reverse makeup? Like, what? I don't know. Like, I just don't know what's going on, dude.
I don't know. But divert your eyes.
Avert my eyes. I will look no further. I will bring my eyes to these handy dandy cue cards that you gave me that I haven't even busted out. So you got skills, my friend, skills.
Look at that.
We apparently have some skills, not all the skills we want to provide an update on our top 10 AI stocks not named Nvidia for good reason, right? In our 111 fashion, there's headlines now out from CNBC saying that Wall Street sees a changing of the guard in the AI trend. It's Intel and AMD are soaring. Nvidia is lagging. I don't know. I just think the financial press just likes to be melodramatic. Have you ever had someone in your life that just likes to be dramatic for no good reason besides just being dramatic?
Do you have like 4 hours? I don't think you
that
really
many,
want to answer
dude.
that question.
Yeah, that'd be a whole therapy session.
Is Nvidia really lagging? Is that true? I mean,
it is. It's been underperforming, but honestly though, it's still been outperforming the semiconductor index. It's done much better coming off the tariff tantrum lows. People like it's just the law of large numbers. I mean, we got to think about this. We used to have this conversation about Apple when it was trading at like 21, 22 times forward earnings. Everyone said it was just a hardware company because 80% of their sales came from iPhones, and then the services business kept picking up, right? And then it got re-rated at 27 times. So Nvidia is in that same, like, I don't know, I want to call it adolescent stage where everyone's trying to figure out, like, could they really keep this up? Even though Jensen Huang, the CEO, is screaming from the rooftops, like, guys, I have more demand than I've ever seen in my life. It's just going up from here. I'm telling you. I mean, if you look, analysts just don't want to believe him. I mean, for 14 quarters in a row right now, he's beat analyst expectations, which means analysts are worse at predicting the future than the weathermen. 15 quarters in a row for sales. I mean, like, he's just crushing it. And analysts are like, no, I just look, sell side analysts are worthless. It's not their fault. They're being
the way they were raised.
What's that?
It must be the way they were raised.
It's not the way they were raised. Economic incentives influence everything. And I'll tell you why they suck. They don't suck. There's no incentive for them to stick their necks out and be right or wrong. It's better for them to herd around. It used to have an incentive, but then they changed the banking fees and rules on compensation where they could get trading commissions, and the average sell side analyst was making $4 or $5 million a year. Not to say that they're not making good money right now, but it's just totally different incentive. So if you look at like price targets for the S&P 500, they all bunch up into the middle, right? And you get like one or two outliers, but it's just groupthink at its finest. So anyway, them saying like, hey, we should diversify away from Nvidia. I don't disagree with the diversify. I disagree with the away from Nvidia. Just because Nvidia is not performing well doesn't mean it might not perform well eventually. It's going to. I mean, it's driving it. I said this, if your only AI play is Nvidia, it's time to diversify. That was episode 47, which I don't know, we're on 55. So that's 8 weeks ago, roughly 3 months ago. And I think it's important, right? If this AI trend is going to be the trend of the next decade, more than one company is going to benefit from it.
And so obviously that was one of my questions, but you answered it right there. It's, Nvidia is doing so well, and I don't understand how, even with the numbers, it's, China is not even included in there, the data centers and that revenue. But if you had one play, is it just diversify with, obviously these stocks coming up, but any other big
It's a
names,
great leading.
AMD?
I love
What's that?
AMD. Look, I love AMD. People today, I was on Fox Business, and they tried to say that AMD made a $10 billion investment in Taiwan and some Taiwan AI startups, and they couched it as AMD is trying to catch up to Nvidia. AMD is not trying to out Nvidia. AMD is just saying, like, this pie keeps growing, and we're going to be a second market share,
Being
second
second
supplier.
place in this industry and market is a fantastic thing.
Sign me up. I'll be second place all day long as AMD, and that's what happened, right? Remember when the 2 generation ago chips, or the latest, the Blackwells are getting ready to come out. There was worries that they might get delayed, and people were freaking out, and it led to more business for AMD. And it conditioned everyone in the space, the hyperscalers, the ones buying the chips, the customers, that, hey, Nvidia is going to supply 90% of our chips, so we need to get a second supplier just in case there's hiccups along the way that happen. I mean, it's the same thing we see with airlines, right? With Boeing and Airbus. Like, the airlines are buying most from one, and then they got to make sure they got some on order with the other just to balance them out. So same thing. You got to have a second supplier. So to your point, great lead in. I don't think there's one other individual stock you absolutely have to buy, but we came up with a list of 10. Let's update the performance. Some good, some bad, some in the middle, right? So Teradyne, one of my favorite non-AI stocks that became an AI stock. You remember what they do?
I'm trying to remember.
That means no.
They were testing chips.
Yes.
Is that the right one?
Yes, dude. Look at you. Listen, the thesis for Teradyne is that they sell equipment that tests the chips that are made. Their quality control. They inspect the chips to make sure they do what they're supposed to do before they leave the manufacturing plant. And it's not just AI chips, it's every type of chip. And as we said earlier, that this whole global chip market's going to be, $1.5 trillion global market. We're selling over 1.4 trillion chips per year globally. And so not surprisingly, their business is booming because that's a lot more chips to test. 70% of the revenue in the first quarter came from AI chips. So now it is a distinctly AI company. It's got a robotics kicker too. Notice Tesla's not on this list. I hate Tesla. I don't hate Elon Musk. I only hate Tesla because it's overvalued, and just the narrative on it is always wrong. It's not a car company, they say, even though 90% of revenues come from cars. It's a robotics company. Now, yes, it's changing into a robotics company. Why do I bring this up? Because Tesla generates $0.0 from robotics. Teradyne, 16% of the revenue. So billions of dollars each year is coming from robotics and automation testing for those markets. So it's a great robotics play. It's a great AI play. Astera Labs, I will be shocked, surprised. I'll buy your beers all night long if you can recall what Astera Labs does. No ChatGPT help.
Hold on a second. I don't know. I don't recall. What is that?
Yeah. Astera Labs. What is it? Sorry, I'm just looking down because Angel Quinones, it says he won't write into the chat because he's afraid. This is the toughest group of New Jersey boys I ever hung with, and they're afraid to write in the chat. What's Astera Labs do? Astera Labs basically provides the middleware, the other chips that support the data centers, the compute happening and the data going back and forth in the data center. So as you can imagine, the GPUs, the general processing units that do all the compute, then have to pull the data and store it in memory and then send it around the data center. It's, as much as you have to do the actual work, you've got to get the result of that work out there and everywhere else in between. And Astera Labs is really functions in that way. So think of it like, I don't know, the plumbing, the electrical wires, right? It's the connectivity that makes the data centers work. So performing great. Innodata provides data services to all the big hyperscalers and AI players. But let's just talk about this. So great average performance, 70% gain. The key takeaway here is, folks, don't put all your eggs in one AI basket. You got to spread them out across more than one name, right? And 10 names here You do equal weight if you took $1,000 and put 100 in each, or $10,000 and 1,000 in each, or $100,000 and 10,000 in each. You would be way ahead by not cherry picking, not over concentrating in one or two names, and that's the name of the game here. So we've had some that didn't do so great. We had one earlier on that we kicked out. I can't remember the name. Oddity, that's what it was. ODD. They were doing all just types of different things. They were in cosmetics and drug discovery, and great concept. The business wasn't kicking butt. Same thing here with Samsara. So I think it's time to move on from Samsara. This was an Internet of Things company that was really using AI for physical infrastructure. So think semi trailers, right? The big trucks that are riding around, construction equipment. They were using sensors and chips in there to get intelligence on that. It's just not working out. Great results, but a little bit weaker than people thought. So we're going to boot it from the list. We're also going to boot Exozymes, not because we doubt the ability, but they're going through a capital raise. And right now, I think the stock's just going to kind of be stuck in neutral, while some other ones could do really well. So
Well,
any guesses with what we're adding?
70% gain overall isn't bad, Lou. So, kudos there. I think that's, that's still pretty good.
Dude, the best thing is I'm baiting my New Jersey boy. He's like, he just threw my name out there again. I'm not going to say anything.
Did you say guess what we're adding?
Yeah, guess what we're adding. We're adding a comment from Angel if he has the courage to comment online live in living color. But what stocks are we going to add to the list? We're going to rip out Exozymes and Samsara.
Would you like me to guess?
Yeah, let's guess.
I'm going to guess Microsoft.
Good guess. So Microsoft, it might seem just, like, why are you adding a mega cap tech stock to the list here? Because Microsoft now is what Alphabet was last year this time. Remember, it was trading at like $145 a share. Now it's, I don't even look, it's like 300 plus. Apple, the same thing. Microsoft is trading the cheapest it has relative to the S&P 500 in the last decade. Everyone's worried that AI is going to replace Microsoft Office or lead to fewer licenses. I think we talked about it a couple weeks ago, that they've actually are reconfiguring and contemplating how they're going to bill for their licenses. And instead of per employee, they're now going to say, no, it's per AI agent. So what you're seeing now is a lot of software engineers are handling multiple agents. Well, now they've just expanded their addressable market, the revenues that they can earn, but they're also on the leading edge of AI. Like, give them credit. They made early investments in OpenAI, and now they're doubling down and making early investments in other up and coming AI companies. So I just think this is one of those. The Mag 7 broke up, as I said, and they just move in opposite. They zig and they zag in different directions where they used to all move in one direction. And I think it creates really good opportunities for investors to say, hey, these are some of the leading companies that now are on sale, but it's not always going to be like that. So like I mentioned, Alphabet was a great play last year that had fallen while everyone else was rising. Everyone said that software and AI was going to eat their internet search dominance. Didn't happen. Apple got just ridiculed, bullied on the AI playground because they weren't investing enough in AI. And now fast forward this year, and they're being applauded for not spending too much on AI and then just being the device, the delivery platform for AI, which I think is smarter. They got 2.5 billion devices. So
Microsoft's not just a kiss up for Stuart, is it? Because I know it makes him happy when you talk about Microsoft.
Dude, you had to go there, didn't you? Yeah, Stuart Varney is a huge Microsoft fan. He's held it, I think. I haven't got it completely out of him. I think he's owned it since like 40 or 50 bucks a share. He said he's never selling it. So then I'm like, well, then why are you crying every time it's down like $5? Because if you're never selling it, he's done just fine. But no, it's not a kiss up. I do that every once in a while because it makes fun. It's fun to have fun with them. I genuinely believe Microsoft, the best Mag 7 stock to buy right now.
All right. Well, the next one we have Modine Manufacturing. This one I actually do know. This is they do heating and cooling, ventilation and heat transfer type stuff. So that with all these energy centers that AI need, you need to keep them cool. That is one of the hardest and most expensive parts, and that's what Modine does.
Dodman's up to snuff on this. I'm out. I don't know how to explain it. You're absolutely right.
That's it. That's all we need to tell everybody.
It's all you got to understand, right? I said it earlier on, like, it's not just the chips. You got to provide the services around these chips and these data centers. pick and shovel plays, right? So Modine, there's another one called Fix, I think, Comfort Systems, that does all the other. So like plumbing, electrical, fire protection. These stocks are on a tear because, as you can imagine, the U.S. has 4,000 roughly 4,000 data centers. There are plans to build another 3,000. Guess what you got to have in all those data centers, especially if they're in Texas, where a lot of them are going. Heating and cooling, buddy. It
Now,
happens.
This might be a strange question, but like I did just
I'm here
see a
for it.
headline the other day of, was it Japan or China, that they were building data center in the ocean? Is that true? That they just launched one?
Dude,
Now, is that
that's
something that is like from
come
a
on.
cooling perspective? It's got to be cooler.
I
No?
mean, I hope Dan the man has this thing on the ready. I call a bullshit,
No?
because
So you're calling false headline?
I'm calling
bullshit,
false headline.
bullshit.
There it is. He got it. He pulled it out.
Okay.
I'm calling false headline because it's not anytime soon. Just like not anytime soon is data centers in space. Yes, Elon Musk is going to be the one that puts the first data center in space, but we're not anywhere near that yet. We don't have the infrastructure to support that. You don't have the infrastructure to put data centers underneath. I mean, think about this. Are you really going to save that much money because these data centers under the sea, Little Mermaid, are going to be self-cooled by water? But now think about all the other things that are going to get more expensive to figure out, right? How do you provide a hermetically sealed, right? Like airtight, perfect data center underwater? All these components that need to be integrated. So I think in the early stages of figuring that out, it's going to cost a lot more than it would to just be building the brick and mortar and steel data centers that we know and that are reliable, that then have to be cooled with, Modines, cooling systems, and other
I
ones.
think you might be just being a little bit negative. It sounds pretty smart to me.
Oh,
I can't tell you how to do it, but I think it sounds pretty darn smart.
folks, this is when the mentor and mentee relationship blows up, when the mentee says he's smarter than thee. You may could be right.
Smarter.
Hey, look,
I'm just saying, like it sounds smart. Building it underwater. Hey, put it in the lake. Don't do the ocean. Put it in the lake. Why not? It is actually cooler.
Friendly wager. Lou and Dodd, what is your go-to fast food meal? Ain't nobody got no time for some fast food. I like fast casual. Dodd, you been in the Suns?
I don't know. Yeah, F1 a few weeks ago. I think that's what it is. But I'm always right. I don't understand.
Yeah. All right. Travis P, I bought Innodata at 40 when you recommended it on Fox Business last year. Should I continue to hold? Yes, it's still a hold. Buy, in my opinion. Innodata, they won't tell you who they work for. It's like BASF. We don't make a lot of the products you buy. We make a lot of the products you buy better. That old slogan. Innodata works with 4 out of the 5 top AI companies. So, go do the math. It's Alphabet, Amazon, Meta, all the bigs. Chad, all right, we're gonna come back to you, Chad. Persistence pays off. Love this guy. No relenting. January 2026. That means going back about 5 months ago. I recommended Prop as one of my top 2 stocks for 2026. Do I stand by that view today? I absolutely do, because it's only May, and if I would have changed my mind, I would have said so. If so, what specifically underwrites that conviction? The conviction is the same thing. We are one of the only oil and gas producers in the United States that are growing production by double digits. We've got a balance sheet issue. Basically, we have high interest rate credit card that we've got to refinance and pay down, which will unlock the value in the stock. That's what's holding it back. There's nothing fundamentally wrong with the company, as our CEO and CFO have been mentioning on our latest quarterly call. Operationally, it's all systems go. Now, Chad, coming back in. So hopefully that appeases you. I haven't changed my mind, haven't changed my conviction. Here's what I can guarantee you. If I do, I will tell you. And that doesn't matter, it's my employer during the day. I'm not going to blindly have faith. I will be honest. The oil picture, no one anticipated. We thought we'd get to much higher prices in the 70s and 80s, but no one anticipated $100 a barrel. So let's see what else we got going here. CW Towers with Mayor cooling for data centers, BZAI, an 8-bagger coming. Bull predictions from Chad Towers. We'll have to check that one out. XE, common new SMR with backing prop question fielded would be awesome. We did it. We fielded that question. You gave us some stock tickers we're going to look at. Dodd, you got your homework for next week, my friend.
All right.
Crush Modine. You're welcome, Chad. I love it. You're so formal in your profile pic there too. Makes me feel underdressed, but man, we appreciate you. Oh, Dan, come on, man. Seriously, I'm not that sentimental. All right. We're rounding out the list. We covered 10 top stocks that are involved in AI that aren't Nvidia. Go to our original
I think it's
broadcast.
great. 70% on those stocks, average gain. That's great. And 2 replacements. I think, that's a good thing. Let's circle back and pick up these in a few months.
Our previous replacement, one of them was Core Scientific, which we were profitable on, but it was being acquired by CoreWeave, which eventually fell apart. So our track record is better than the average baseball player. I'll take it all day from Sunday, every way.
Yeah.
All right. We're coming right back after a brief break, but don't forget to follow us on socials. If you're still out there, Angel, what the hell are you so afraid of? To make an intelligent question.
Dude, Angel better check in or you're going to blow up.
I'm going to be paying for therapy for Angel because he's not checking in. Oh, man. Join the conversation anytime, all the time. Ask us whatever you want. We'll try and answer or we'll just laugh it off and move on. That's what we do. MoveOn.org. We'll be right back after this short break.
Let's get back to the markets. Lou Basenese is sitting here, and he's got a red-hot stock pick for us. Halozyme Therapeutics.
I wouldn't say red hot, I'd say dirt cheap, and I love cheap stocks. And most people don't think of biotech as cheap, but what does this company do? Think of ARM Holdings, but in biotech. ARM just collects royalties for developing technology. Halozyme does the same thing. They develop the technology that lets you take IV infusion drugs for major big pharma and turn them into injections. So instead of taking a 2-hour infusion, you get a shot under the skin in a couple minutes and it's done. Earnings have been great. Revenue growing at 40%. Earnings should double this year, which I say stock prices ultimately follow earnings. I think this is a stock that trades for $120, $130 a year from now. They've got $1 billion growth on the way, $6 or $7 billion market cap company. So right in that sweet spot of the market for companies that are growing fast, undervalued, only 8 times forward earnings.
I'd take a doubling in value in 1 year anytime.
All right.
I hope you're right.
I hope I'm right too. We'll come back and figure it out.
All right.
All right. We're back for one of our favorite segments, Headlines and Head Scratchers, where Dodd freaks out and wonders, am I going to ask him to lead every single one of these? And the answer today is yes. Nah, I won't do that to you, buddy. I got to give you kudos, though, because we've been doing this 55 episodes, right? Some of those now because we're counting the other interviews we're doing, but at least you and I got 4 dozen of these under our belt. And if I want you, I won't do it because I don't want to freak out and see what I looked like on the first episode and what the hell we were doing. But you should
bring back crypto or crap. I'm good.
That's a wrap, folks. We're cutting out right now. If you surprise me with crypto or crap, we're out. But I got to give you credit, man. Your market knowledge, and this is a testament to anyone here listening that's a newbie in the markets or doesn't think they know enough. Your understanding of the markets in just a wee 12 months has been transformed. You don't probably see it, but I do. Just in your confidence, the questions you ask, the understanding, like when I just pull names out, Teradyne, like you understand what they're doing. So, man, kudos to you.
I appreciate it. Well, I'm trying, man. I'm trying. I'm just here to represent the average retail investor.
Try sunscreen too one time. That might help as
well. Dude,
I
swear, I don't know what the hell's going on. It's the lighting in here. I don't know.
Anyway, one of your favorite movies of all time, Dumb and Dumber, and we've got 2 headlines to pull up here. Dumb. We talked about it in the beginning here. The dumb money, the smart money acting really dumb, saying it's crowded. You got to get out of the semiconductor trade. Here's the funny thing. In the last month, I think we showed this last month. So just focus on the far right here. It shows May 2026, this huge rally up. And this is their fund manager survey in what they're allocating to equities, right? Are they overweight? Are they like all into the market or saying like, oh, we're getting out of the market because we're afraid there's a correction or a bear market coming? A month ago, they were all freaking out like it was the end of the world as we know it, REM. Now they're like, it was party like it's 1999, Prince. Like it's ridiculous. And I don't even know if I got those bands right because I'm terrible with music. I'm freaking rolling with it, folks. All right, we're rolling. But like this is the bipolar behavior you get from the quote unquote smart money because they're just chasing fees, chasing performance. It's not a reliable indicator from a leading. Like don't follow them, do the opposite. So when they get extremely underweight, I mean, look back there. I mean, if you look at these like extreme drawdowns, they're coming, right? Like coming out of the financial crisis, COVID, those are great buying opportunities. So it turned out. So record jump in them, it's FOMO. They're like, crap. The everyday average investor, the quote unquote dumb money, was buying every dip. We did it last year and we outperformed them. We're doing it this year, and they freak out and panic and come back in, which is what drives the market to higher highs.
Yeah, well, I look at that chart and I see, a lot of ups and downs. I think back to what 2003, and it goes like this, and that's cyclical. So the question I have is, I look at that, and we're here right now. So at some point, it's going to come down. Like, and I know timing the market you can't do, but like,
No, and I think
what's the smart play there from
you're asking the right question. These guys are incentivized to trade in and around in stocks, right? Like they're trying to game the system for a little bit here and a little bit there, some on the upside, some on the downside. Us, we're not traders, we're investors. So I think you look at this, you ignore the noise and you treat it as opportunities to buy more when they're like really low. And then when it gets really high, you trim, you take some profits off the table and some of your winners and buy back some of the ones that are fundamentally strong that are losers. Use this as a guide to just guide your trading activity. But like, we're not traders. So we're investing for the long haul. If you looked over time, right? If I like overlaid this chart all the way back to 2000 with the actual price appreciation of the S&P 500, like these guys like look neurotic, and the stock market just goes up and to the right, essentially. So
what you're telling me, which I translate to, is from my perspective, is this is not the right chart to look at. My question is a good question, but look at the chart, where the as you just say, the stocks rise in the long term. So don't be a day trader or a short-term trader.
Don't be a day trader. Don't be a short-term trader. Focus on earnings, S&P 500 earnings growth follow, and then the S&P 500 price performance follows that. So never a dumb question here, Dodd. So don't even suggest you could have ever asked a dumb question.
So is the Willy Wonka machine the best slot machine to play in Vegas?
That's a dumb question.
You said there was no such thing as a dumb question.
That one's going to be banned as much as the crypto or crap game. So moving on down the road, I'll tell you what, dumb bets.
One day we'll be playing Willy Wonka in Vegas together. And you're going to love it.
Maybe. There's no dumb questions, but there are dumb bets. And remember our predictions episode in January. I predicted that the prediction markets, to throw another prediction in this prediction quandary here, is that they were going to get banned. It was going to have an epic explosion at some point, and lo and behold,
so Prince and Kirby Puckett State were the first one to do it.
Kirby, you went back to Kirby Puckett, like
the only two famous people out of Minnesota, right?
I don't know, dude. There's plenty of Somalis that are pretty famous for ripping off the government with a lot of billion-dollar theft. So, but this is interesting, right? The leading state for fraud and government waste is now actually doing the right thing. I haven't even read into this. I don't know if Governor Tim Walz is behind this. I doubt it. But I think this is spot on. You're going to see this more. Prediction markets are nothing but pure, you're just gambling and speculation. There's no predictive value in it for stock markets. I don't advocate it for anyone. I would be going long if I could, gambling addiction services companies. I don't think there's any out there that are publicly traded, because I think that's what's going to create. It's going to breed it.
Don't play the poly market or the Kalshis. Play the gambling addiction services companies,
and definitely not the Willy Wonka slot machines, you knucklehead.
That's entertaining.
No, look, we're actually going to sit down with a guy, I guess, later next week that has a remarkable story of overcoming addiction and gambling, and then drugs and alcohol too. And I'm going to talk to him about this specifically. Like, my fear is that Kalshi and these prediction poly market are just going to lead to a generation of just gamblers. And some people are going to be genetically predisposed where they can't handle, right? Like, I just don't think that we're thinking through this, the regulatory consequences of not regulating this enough. So I'm encouraged to see Minnesota, of all places, really clamp down on it. So that being said, we got three more things to get through.
I think they're trying to lead the charge of bringing their name back, is what they're trying to do. They're so low in the Minnesota is so low.
They're in the 7th level of Dante's Inferno. There ain't no coming back from that, my friend. So,
but this is a step in the right direction.
Step in the right direction. Do nothing. That's right. Do nothing. Going back, we're going to burn through this one quickly. You said, what do I look at that chart? I just get confused. Do nothing. I thought this was a great quote. Guy was saying, like, best advice I give founders that exited and had a big sum of money is go set up an account at Vanguard because it's so user unfriendly. You're never going to buy and trade and sell stocks in there. And that's best thing that you can do. The hardest thing to do as an investor is do nothing, to sit tight when everyone's saying you should be buying this and selling that and buying this new thing. And yeah, so do nothing. It's actually, if you don't have a really compelling reason to buy an investment, don't.
All right. I'm okay with doing nothing. I have a hard time doing nothing, but I will try just for you.
All right. Now, remember at my alma mater, which you secretly love.
Oh, let's not go there. So inflate me.
Yeah, don't tase me, bro, but inflate me. So this is one of those charts that I think,
not giving you the opportunity to fluff up those Gators.
Gators. Go Gators. You always say go Knights at the end, so I got my go Gators in earlier. But no, this is one of those charts I love to bring up. It's updated since 2000. Here's the key. It shows what's gotten more expensive and more affordable. I want to give you the secret for interpreting this chart. Everything red that goes up in price is primarily government run. Everything blue that's going down or holding steady in price has to do with technological innovation, is deflationary. So get the government involved in hospital services, college tuition, textbooks, childcare, medical services. Guess what happens? Housing is structurally flawed because of all the government bureaucratic involvement in permitting and land use, etc. And you, my friends, find out why we get more inflation. And I would argue that's outside of oil prices. When oil prices go down, there is a structural problem in housing and healthcare that are always going to be persistent inflationary pressures. And that's because the government is in the way. That's your macroeconomics lesson for the day.
I believe it. TVs are so cheap right now. I don't understand. You can buy a 65-inch TV for like $200 now, and back, not too long ago, it was thousands of dollars.
Crazy. Well, it's something to keep in mind. The cost of things are going to come down because AI is deflationary. It's a matter of, can it balance out all these ridiculous inflationary things? I'll tell you what, though, I've been reading a ton of headlines. A lot of these colleges that have massive endowments are cutting staff. Enrollments are down. They're cutting tuition because the boondoggle's over. The government's caught up to it. You can't just inflate prices for no reason. But anyway, unhealthy. Yeah. Anyone want to tell me this is an unhealthy market when every sector except one in healthcare is showing earnings growth? I don't think so, my friend. Homie, don't play that. This is the underpinnings of this market. This is why even with oil prices above $100, you're still seeing the stock market hit record highs, because earnings keep growing, not just in the AI and tech space, not just in data centers and power and utilities, but across the board. Every single sector, tech, communication services, materials, discretionary, you name it, except healthcare.
All right, let's hope it keeps going, man. That's
all right, keeps going. That's what everyone that hopes is that invests in the SpaceX IPO is hoping happens. So
yes, SpaceX. I was excited to talk about this because I can't wait to invest in that SpaceX IPO. I think I'm going to sell everything
in the SpaceX IPO. I will literally come down to Orlando and club you over the head. I'll paint you redder than you are right now and publicly embarrass you. So, all right, before you run, we always end with something that's on the top of my mind that is just an urgent warning or call to action. This week, it has everything to do with SpaceX IPO. They filed in the last 24 hours. And goddamn, look at that total addressable market. They're trying to make you believe that this stock can go nowhere but up because they can service $28 trillion worth of addressable market over time, but it's going to come public at like $2.5 trillion. It's already trading on the hyperliquid exchange at about $204 a share, which equals $2.4 trillion in market cap. It's over 100 times revenue. The company did just under $19 billion in revenue last year. You don't pay up and win in the IPO game. So IPO FOMO, do not worry about missing out on the SpaceX IPO. If you can get an allocation at your broker for 100 shares, take it. But don't be trying to buy in the open market and the aftermarket once it begins trading in the first day, in the first week, in the first month. You're probably going to have the best entry point about 3 to 6 months in. And I'm telling you this from experience trading these things, but then also from my alma mater, none other than Professor Jay Ritter, who we got to get on the program one time, has the most exhaustive research on IPOs. All you got to do is look to the right bars for as you get further out. Most IPOs underperform. This shows the returns, and like worse than negative 10%, like over 50 to 60% in year 1 and 2 of IPOs are underperformers. So don't rush out to pay overpriced valuations for SpaceX or OpenAI or Anthropic. We'll be here to bottom fish them and buy, just like we did in Astera Labs, in ARM Holdings. Meta even came to market and crapped the bed on it. They came, I think, at like $19 a share, $18 a share, and dropped all the way down to 13, or maybe it was in the 20s. But it pulled back 30, 40%. You're going to see a pullback in SpaceX. I guarantee it.
Okay, so here's the bigger question I have. I hear you.
You're out of time, dude. 6:01. Sorry, man. We're out. No, what's your question? And then we're wrapping.
Real fast. I believe you. I'm, not looking to buy the SpaceX IPO, but money's got to come from somewhere. And we know that retail investors are fish, a lot with the meme stocks and how, a lot of things, retail investors will follow the trends and trade. Money's got to come from somewhere. Where is it coming from? Is it going to be coming from tech stocks that they're going to sell off on and put it in?
No, that's a great question. Yes. So people that buy into this, institutions, you're going to get big institutional orders. You're going to get orders from retail because they're putting it out to Schwab and other platforms. I think SoFi is going to get an allocation for some of their retail. They're going to sell what's working, right? I saw this when I was an investment banker. When you do one deal and you get a new one, people sell the last deal you did if it's up to fund the new deal. So I think you're going to see that. So we could see some weakness around these IPOs in the general market as people take profits to fund this. But at the same time, it's going to mint a lot of new millionaires. There's going to be a lot of liquidity that comes into the market because of all this. I mean, it's like Nvidia. I can't remember. It's something like some crazy stat, like 80% of Nvidia employees are now millionaires based upon the stocks run.
Yeah.
So chew on that for a minute. You answer your own question.
Answering my own question from what you said before. Don't worry about it because we're long-term investors. So don't sell off thinking that there's going to be a drop in, some sort of, SpaceX IPO, so just, stay for the long term.
Be patient and do nothing until we come and say, hey, it's actually cheap. It's time to buy, because that's what we're going to be looking to do. So we'll tell you when we start entering a position, SpaceX, OpenAI, and Anthropic. We promise that all the time. We're going to give you all filling, zero fluff, just the straight goods on what you should be doing in the markets. Not personal investment advice, mind you. Go consult your financial advisor. Do your own due diligence. We'll tell you what we're doing. If you follow us, that's your own decision. But follow us on socials and make sure you follow us back here next Thursday, 5 p.m., where we've got some really great guests. I'm not even going to tell you who they are because I'm about to cough. These seasonal allergies killing me, and I don't want to end the show like that. Big Skinny with Lou Basenese and the Dodd Man, the Red Tomato, coming to you from Orlando, Florida. Go Knights, go Gators. You can't say it. We're out.